Eric Muadh, Muadh.com for the weekend of November 14th and November 15th, 2015. Let's take a look at markets here, and we see that on Friday we had a pretty much down day across the globe. Most markets were down about 1 to 2%, pretty much everywhere you look. Take a look at Europe. At the close on Friday, we see that Europe also ended the day pretty much, let's call it about 1 to 2% down on most of the markets. And take a look at the Americas, and we can see here that with about an hour to go before the close of Friday's session, we can see again markets are slightly down in Brazil, and Canadian markets are down. Mexico is down also about 1%. I'm recording this with about 1 hour to go in the US, and US markets are also called lower, and we'll see how the market is going to close. It looks like the Dow is down 1%, NASDAQ down 1.4%, and S&P 500 is down about a percentage point. Crude oil is down about 3%, 2.5%. So let's take a look at world charts. And we begin by taking a look at Australia. It looks like the analysis we had last weekend has come into play. As you can see, the market failed to hold above that backtest line, so that was correct. We also see that where the market has been stalling is holding above the 50 on the weekly RSI time frame. So resistance at the 50 suggests that we are now entering a new phase in the market, which is a market that looks to go lower at every opportunity. So that's what it looked like. And also there's another line that we had drawn on the weekly, which confirmed resistance as we started the new week right there. And again, another instance and another reason to think that this market continues to go down. If you take a look at the monthly chart for the Australian market, the key is whether it breaks below the recent monthly closing low, and the level to watch there is 5,058.60. If the market drops below that threshold, that would suggest that we are now entering a new bearish phase with more downside possibility. So if we end up cracking below that, be aware this might lead to an even deeper correction. The reason why I say that is if it breaks below to fresh monthly closing lows, you can see that the RSI on the monthly would also be making a fresh 3-year low, and the MACDs are already trading at 3-year lows here, or about to move to fresh 3-year lows on the main MACD. So the risk is if they break below 50.58, that's going to suggest even lower prices. We take a look at China, which right now is struggling to hold above the 50 level on the weekly RSI. Keep in mind that it had a nice run, so let me show that to you. Had a nice run. Once it jumped above 50 here last July, it went on a nice run over the next couple of months. Recently, ever since we broke below the 50 level on the weekly RSI, this is where the market has been making short-term highs. So right now we are trying to decide whether we can hold above the 50 level on the weekly RSI. If we can't hold above that level and we roll over, that's going to suggest that there is more downside after a recent move higher over the last month or so. So the key is whether it can hold above the 50 on the weekly. If not, then we should expect lower prices. More than likely, it might be some type of resistance around that 50 level, because if we take a look at the next two markets, for example, take a look at Hong Kong, we can see that it came back and tested the recent break point on the weekly and failed. So we can see that markets are failing to hold above recent break points. So that is indicative of a market that wants to go lower. So that's Hong Kong. Take a look at the KOSPI. The KOSPI is also struggling right now after coming back to test the break level. So we can say the break took place, let's call it about July, and draw a line from there. We can see that this has become resistance. It was resistance here for a move low, substantial move low actually, and now this has become resistance again. So we are seeing markets struggling to hold their weekly lines, and so more than likely this continues to suggest there is a possibility of even lower prices. Again, we see this developing all over the place as we have been discussing the last couple of weeks. Take a look at the Nifty. Recently had broken below here in August, and that break in the Nifty brought the market lower. We haven't been back to that break level. And now if we draw a line somewhere around there, we can see that the market has failed to move above and hold above 50 on the weekly time frame, which might suggest this is the technical reason for the last 2-3 weeks of a slide. So this sell signal we see across the globe, and again we see here did show a little bit of a weakness in the Indian market. Take a look at the one thing I wanted to point out here is now we have to watch for this recent weekly closing low. If the Indian market is to struggle, then it needs to first and foremost to break below 6,000 or 7655.05, and most of these numbers should be in the description of the video. So we can see that the Indian market might have an attempt to break to fresh weekly closing lows for 2015, actually weekly closing lows for the last year. And if it breaks below that, any break of that threshold would suggest even lower prices. Now, my personal thinking is that the market is going to have to make fresh lows right here. The reason why I say I think the market might make a fresh low is because we can see that the 10-week moving average has already moved to fresh lows. Because the 10-week moving average has moved to a fresh low, generally speaking, the price has to follow. So because the 10-week moving average is already trading at fresh 52-week lows, I think over time the market is going to have to break down. And so the risk is that it breaks and cracks below the recent weekly closing low, which might open the floodgates for much lower prices. On the monthly time frame, you can see that the recent monthly closing low that we discussed last weekend has been broken. So this was the closing low for 2015. The market has dropped below that, and that level to keep watching is 7,948.90, which happens to be the close of about 2 months ago. So as long as the market is trading below this number, the risk is to the downside. Keep in mind, on the monthly time frame, we are getting very close to moving below 50. If and when we move below 50 on the monthly RSI, expect a big down month. So the risk here is that as we move below 50, we might get a sharp drop in markets. If we take a look at a 13-month monthly chart and take a line here that we've been watching, this line was this line has been good to the market, because every time it bounced on this line, the market would go on to record a nice bounce. And even recently here, it tried to hold the line. And we talked about the risk here being that maybe the market might come back and break that line, and it is doing exactly that. So a break of this line would suggest to me that we are probably gonna see much lower prices. So again, as long as we are breaking below this multi-year support line on the monthly RSI, one should expect that this market is now looking and showing the probability that it might go to much lower prices. I'm talking about 20% down, 30% down, maybe even 40% down. As long as the market is breaking that line, this now becomes a possibility in the coming months. So the risk is there. We shall see. Of course, we have to take it month to month, but for now, because the market is breaking and we haven't seen anything to contradict that, that break is not a good sign. Let's take a quick look at the South African market, which also shows that it came back to test the previous break level. So there was a break here. That break in the RSI brought the market lower. Market has not been back to those levels. And so we draw a uniformity line like that, and gives you a lot of information. Since then, every time we come and hit that level, or that red line, you can see that the markets have pulled back. Very easy, very simple to see how this is playing out. And recently, over the last 3 weeks, we hit that level, and the price since then has been pulling back. So we had seen, and we were suspecting that the market might have to pull back because of this clearly defined line of resistance, and that's exactly what is taking place. The risk here is for even lower prices. Let's take a look at the monthly for the South African market, and we see here that the risk now is that it continues to break the monthly RSI. So the risk is if and when the monthly RSI cracks to fresh 3-year lows, so keep that in mind. Any move to fresh 3-year lows on the RSI is bearish, and also any confirmation of a fresh move to 3-year lows on the MACD is bearish. And so the risk here continues to be to the downside. You can see the main MACD could easily move to 3-year lows, which would be another reason why this market might see lower prices. If we take a look at the Nigerian market, just the fact that it is trading below 30.90 on the monthly RSI, and here I'm using the ETF that trades in the US, NGE. I'm not sure how well of a representative this is, but we'll use it. So NGE, the ETF that tracks the Nigerian market, is trading below 30.90. I think this suggests that it still has to do a lot of work to fix this. Anything below 30.90 would suggest lower prices. And over the last week or so, we had started to see signs of support on the weekly RSI, connecting the support line like that. You can see it connects nicely with the lows of the RSI going back to late 2014. As long as this is holding, maybe there's a chance that it can move higher. All right. The risk here is that if it breaks that line of support, any break of that line would suggest much lower prices. So the risk still continues here to be that we might see lower prices. Keep in mind, we are looking at the 10-week moving average making a fresh low. So the 10-week moving average is already trading at fresh lows, suggesting that the prices might have to make a fresh 52-week low. So again, lots of indication here for markets that still are showing higher odds for downside pressure. Let's take a look at the FTSE here, and just like the other markets, we came back to this break level, which happened to be around the 50. So depending on how you want to look at it, we had drawn a line here like that. Why did we draw this line here? Because this was the break level in August. Once we broke through that price, the market hasn't been back there. In fact, we actually dropped. So we know that that was a serious break. If we extend the same line, we see that now what we were suspecting, that was a back test. The market failed to hold above that blue line, and since that resistance over the last 3 weeks, we see that we are headed lower. So the risk continues to be downside pressure. Also, notice that we've failed to move above the 50 level on the weekly RSI, and every time we come close and show resistance at the 50 level, the market drops. And again, we came close to 50 and failed about 3 weeks ago, and since then we are down. The key for this market short term is whether it can hold above the recent weekly closing low, and that's the recent weekly closing low. The price to watch there is 6,042.92. And again, all these numbers should be under the video description. You can see any break below that price range would suggest a market that is probing fresh multi-year lows, and the risk continues to be to the downside, as you can see. Take a look at the monthly chart for the FTSE, and I just want to show you the price level to watch. There is the recent monthly closing low going back about 2 years, and the level to watch there in case the market drops below that level is 6,061.61. So this recent monthly closing low, if the market violates that price range, expect much lower prices. So that market needs to hold above that level, otherwise we might see a continuation of this move. And again, we can see here the technical risk is that the monthly RSI moves to fresh 3-year lows, and also that the main MACD continues to probe fresh lows. Because the MACDs are below zero, as you can see below zero here, making a move to fresh 3-year lows. Now the risk is the RSI might do the same, which is again suggestive that if the market can't hold that 6,061 level, that break would suggest that we are going to go into an even deeper correction for the rest of the year, maybe even into 2016. Take a look at the French market, and it too had come back to test the line of support on the weekly right there. Once we broke down here in August, the market has been down since, and we can draw a line from there, which happens to be somewhere around there. We made a double top resistance over the last 2-3 weeks, over the last month or so. So double top resistance, and since then, with Friday's drop, we can see that this is being confirmed as showing a sell signal for the market on the weekly time frame. Take a look at the German market, the DAX, which also on the weekly it was showing resistance. If we go to the break level, depending on how you want to look at it, you can draw a line like that. Why? Because it gives us the break signal here on the weekly time frame. Since then, the market has been lower after breaking below that, and we can see that this also become backtest failure, and after that clearly defined line of resistance, the market's been down. So lots of sell signals everywhere you look, suggesting that the market is still going to have to prove itself before it has any chance of moving higher. Let's take a look at the Canadian market. And what we see here for the TSX is a couple of observations. The level we were watching for a break, so we had broken below this level here in August. So let me just draw that. So there was a break here, which was somewhere here. Market hasn't been back to this price range. If we extend the same line, we had discussed that this was now being back tested, and we saw a double top resistance on that line, which is somewhere around here in the 14,000 area. Since then, we can see that the market has lost almost 1,000 points because of this very simple to identify resistance on the back test there. And we are also seeing resistance if you draw it somewhere around there. RSI was showing resistance and has been showing resistance on this red line throughout this period. So lots of reasons here to expect lower prices. The key, in my opinion, is whether the market can hold above the recent weekly closing low. This past week, this week here, we are seeing a fresh break to fresh weekly closing lows, and the level the market was breaking through on the weekly time frame was 13,339.74, which happens to be this weekly closing low here in September. So as long as the market is holding below that threshold of 13,339, we should continue to expect lower price levels. If we take a look at the monthly chart, it gets even worse, because you can see that the market is now below the recent 2015 monthly closing lows and probing fresh 52-week lows. Not good. And now that the market is breaking below 13,306.96, which happens to be this monthly closing low here in September, this is a fresh break, which might suggest that we might see prices well below this. And the reason why I say that is take note of what the RSI and MACDs are doing. Number one, the RSI is just now moving below 38.2, which is a major no-no. So the monthly RSI is moving to below 38.2 for the first time in years. Not good. It is also making a move to fresh 3-year lows. Not good. So the RSI is giving us a major sell signal. And if we take a look at the MACDs, we can see that the MACDs are also showing us that they are trading at fresh lows, trading below zero, trading at fresh lows again there, close to fresh lows, and just now entering that zero zone. So the market, the Canadian market, looks absolutely bearish. As long as it is trading below the recent monthly closing low, one can expect much lower prices in the coming weeks and in the coming months. If we take a look at the Brazilian market, just want to show you one simple observation. The recent break level, as we've seen in other market, recent break here in July, market hasn't been down since, and I'm using the EWZ ETF that trades in the US. All right, so once we broke through that level there, we just draw a simple line. We should be somewhere around there, and you can see that the market has shown double top resistance over the last month or so. So that double top resistance on the previous break level suggests that net we are looking at the Brazilian market also showing a sell signal. So lots of markets showing lots of sell signals. I want to conclude this by taking a look at the NASDAQ here, as it has about 45 minutes to close the week. But the key is that the NASDAQ had come back to the previous line connecting the tops on the weekly RSI time frame going back to 2014. All this have been highs on the RSI, and now the market came and made contact with that level, and we seem to be pulling back, and we were always suspecting that this could be a major sell signal. That's exactly what has taken place. We see that the market might close below 50 on the weekly RSI. If it closes below 50 this Friday, then this is a confirmed down week. At the same rate, if it closes below 50 in the coming week, then that's going to suggest another down week in the market. So the sell signal was confirmed by this resistance around this level here on the NASDAQ, which gave us the recent break level also. So lots of reasons we were expecting the market to pull back around current levels. So that was reason number 2. Reason number 3 was the back test, like that. So we broke down here, and that became back test area, which is now giving us this move lower, the biggest down week in a couple of months. So I think at the end of the day, we should still expect lower prices because we haven't seen the market give us a buy signal. Eric Mwathe, Mwathe.com. Enjoy your weekend. Good luck, peace, and blessings. I am out. E-A-C-S. Yeah. Woo. Yes. Woo. Yeah. Woo. Mwah.